We do not try to predict every short-term market move, we focus on company fundamentals, and we invest where we see real growth, quality, and the ability to create value over time. In the first part of the year, equity markets continued to deliver positive returns. Year to date, the US market was up around 8%. Europe was up a little more than 9%. Asia, in US dollar terms, delivered returns of more than 20%. And Italy remained one of the strongest markets, with a return of around 16.6%. But the most interesting point is not only the final return, it's the understanding where that return came from. In the US, for example, market valuation actually contracted, so the move was not driven by multiple expansion, quite the opposite. The main contribution came from earnings, which grew by almost 20%. For us, this is a very important message of solidity and sustainability of returns. The US equity market remains strongly supported by fundamentals. First quarter earnings were strong, and we expect a further acceleration in the second part of the year. For this reason, we remain constructive on global equities. When the market goes through periods of weakness, we see them as opportunities to increase exposure to the best companies, companies that continue to grow, that generate cash, and that deliver high returns on capital. This is the core of our approach. We do not try to predict every short-term market move, we focus on company fundamentals, and we invest where we see real growth, quality, and the ability to create value over time.
One of the key themes today in the market is the investments in the data center. This theme started in the US, but now it's clearly a global theme which rely not only in digital infrastructure, which is an important part of the US economy, but is creating opportunity across the industrial market in the US, but now also in Europe and in Asia. It's also clearly about the industrial companies, about electrification, it's about cables, it's about power grids, and all these companies and services that make growth of data center possible at 360 degrees. We increased our exposure to chips and memory, especially during the periods of weakness during the Middle East war. At the same time, we remain significantly invested in the industrial companies that enable the growth of data center. We also like other structural themes like reshoring, energy security, and in Europe, one of the themes we were bullish the most relies on telecommunication. In fact, European telecoms are a sector that is consolidating. Chief execs have restructured the P&L of these companies. Now we have companies which have a clean profit and loss. And while our valuations are still compelling, the consolidation of the sector can unlock further value for shareholders. Italy is a country that we love. I remind you that Italy in the last 5 years has been one of the most performing markets in the world, basically. Today we have attractive multiple compared to other developed markets, and this leaves clearly room for further value creation. We expect earnings remain solid, and year to date, the Italian market has benefited from several factors. As mentioned before, earnings are positive, valuation continue to close the gap vis-à-vis other European countries, and secondly, the spread between Italian government bonds and German government bonds are at the lowest point in the last 20 years. And this is a clear tailwinds, especially for international investors. Another important element for the market has been the renewed acceleration in the banking sector M&A, which clearly provides support for the whole market and confirms that Italian financial sectors remains central for investors and remains also in very good shapes in terms of fundamentals. We select companies with strong fundamentals, strong growth opportunity, strong free cash flow generation, high return on capital employed. In a market environment that can remain volatile, this approach becomes even more important to generate good returns over the long term.